Well, this week did not go the way that I expected. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings reports for the week of February 8th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Well, this week did not go the way that I expected. I really expected the GameStop and AMC thing to affect the wider market more than it did, but I was wrong. And this is why you hear that phrase over and over again, time in the market is more important than timing the market. This is also why, despite my feelings about the market, I didn't actually sell anything and put more money on the side. I just kept the investments that I had in place. Two reasons, really. Number one, I don't want to pay taxes on them for selling at a profit if I don't need to. And number two, I don't want to bother trying to time the bottom of something that I thought was going to happen. So leaving my investments in place turned out to be the correct decision. Yay me. That being said, all of our primary indexes finished at or just below their all-time highs. It was a really wonderful week. Earnings were great this week. So let's get started with the news. Just a reminder, for anybody who's not aware, I do publish my technical analysis every week. It's on a Google Sheet, and I have the link available below the video. Last week there were some problems with it. I had it published to PDF and some people weren't checking their download folder. So this week I just published it as a web page. You could go ahead and check that out if you'd like. First story, Amazon's earnings. I love Amazon. It's the premier retailer in America. Everybody loves Amazon. Their Q4 sales topped $100 billion for the first time. We had Apple topping $100 billion last week, Amazon topping it this week. Their Q4 revenue was $125.5 billion versus $119 billion expected, which is an $87 billion year-on-year increase. This is the really amazing part. Their fourth quarter earnings per share came in at $14.09 per share versus $7.34 expected. That's basically doubled, and this isn't like doubling on some low expectation like 5 cents a share or 10 cents, oh big deal. No, $7 a share was expected, 14 is what they turned in. Absolutely incredible. Amazon's also expecting to hover over the 100 billion threshold in the current quarter, anticipates its first quarter this year. Net sales will come in between 100 and 106 billion. Should be back-to-back $100 billion quarters we're looking at for Amazon. In related news, Lex Luthor is going to be stepping down as the CEO of Amazon, and he's to be replaced by the AWS chief Andy Jassy. Jeff Bezos, the company's founder and CEO, would be stepping down from his role in the third quarter of 2021. He's going to be transitioning to the executive chair of the company. Bezos is the one who founded the company. This is his baby, and he's finally stepping down. Some people are going to be really happy, some people are not. He did get a lot of flack for the wage that his workers were paid not being high enough, but he also did grow one of the largest companies in the world. So no matter how you feel about the person, he did have quite an impressive career as a CEO at Amazon. Next story, this is kind of like a non-story and more of like a rumor revelation type thing. Exxon and Chevron CEOs discussed merger. Exxon and Chevron are the two largest American oil producers, and they spoke last year about combining their companies in what would have been among the largest corporate mergers ever. These talks took place at the start of 2020, right as the pandemic was setting in. And if you remember, at the same time, there was a Saudi Arabia-Russia oil feud that was pushing the oil prices down. So the two companies were discussing potential merger as a way to alleviate the financial burdens that each of them was facing. The combined company's market value could top $350 billion. Exxon has a market value of $190 billion. Chevron's is $164 billion. Together, they would likely form the world's second largest oil company by market cap and production, producing 7 million barrels of oil and gas per day based on pre-pandemic levels, second only in both measures to Saudi Aramco, which is the largest company in the world. Now, this merger, I don't think it actually likely would have been able to occur because of antitrust laws and anti-monopoly laws, stemming way back from like the Sherman Antitrust Act. But rumor is these talks are still kind of ongoing. They're just on the back burner for now, and this still might actually be something that we're looking at the possibility of seeing in the future. For a little history lesson for you guys, and this is like the biggest evidence that time is a flat circle. When I saw this article on Wall Street Journal about Exxon Chevron merging, I just started laughing because we've basically gone back in time 110 years. Let's take a little walk back in time. In 1911, there was a company called Standard Oil, and it was dissolved for violating the Sherman Antitrust Act. It was established in 1870 by John Rockefeller and Henry Flagler, and when it dissolved, it split into 34 companies. Two of these companies, the largest ones, were Standard Oil of New Jersey, SO, which eventually became Exxon, and Standard Oil of New York, Saucony, which eventually became Mobil. These two companies later merged into ExxonMobil. Another one of the large companies is SoCal, which was the Standard Oil of California, which became Chevron. So back in 1911, Standard Oil split up into Exxon, Mobil, Chevron, and here we're talking about them joining forces together again. I wonder what they could possibly name the company after the merger. I have an idea. Let's call this new mega corporation Standard Oil. Interesting footnote in history, also on the same day as Standard Oil was broken up, American Tobacco Company was split up into 4 competitors. It was the largest tobacco company at the same time, and it was also decided by the Supreme Court that it was in violation of the Sherman Antitrust Act. Next story, U.S. Bureau of Labor Statistics. We had the jobs report come out. In January, the unemployment rate fell by 0.4 percentage points to 6.3, down from 6.7 last month. The number of unemployed persons decreased to 10.1 million. They're lower than their April highs, but they're still above pre-pandemic levels of 3.5% and 5.7 million respectively. You got these people that are out of work, and it's absolutely not funny whatsoever. People are really struggling. And I think the wording could have been a little bit different, a little better in this report. Look a couple paragraphs down, the number of permanent job losers. Do we really have to include the word losers in here? Can't we rewrite this as people without permanent jobs, people who lost permanent jobs? I know it's not calling people losers, but including the word losers in a jobs report when people already feel like shit is kind of like why are we doing this, government? More people are getting back to work. Good for the economy. This might not be the biggest news story for American investors. I got really super excited. You guys know I live in Korea. South Korea unveils a $43 billion plan for the world's largest offshore wind farm. They want to have it built and in operation by 2030 as part of efforts to foster an environmentally friendly recovery from the COVID-19 pandemic. In Korea, the Moon Jae-in administration has been pushing a Green New Deal to stimulate economic recovery from COVID, and this plan got put into place like months after the pandemic onset. Most of the Green New Deal is kind of dealing with the fourth industrial revolution, AI, robotics, that sort of thing, but also green energy. And the country's allocating massive amounts of money into this green spending. The purpose is to curb reliance on fossil fuels, make it carbon neutral by 2050. Project would provide 5,600 jobs and help achieve a goal to boost the country's wind power capacity to 16.5 gigawatts by 2030 from 1.67 gigawatts now. For comparison, because this is just an abstract number, currently the world's largest offshore wind farm is Hornsea 1 in Britain, which has a 1.12 gigawatt capacity. So here we're talking about generating 16.5 gigawatts with all of the wind power in the country by 2030. That's impressive. If you look at this company list, Korea Electric Power, SK E&S Hanwha, Doosan, CS Wind Corp, Samkang, you actually can sort of invest into this if you're interested. KEPCO, which is Korea Electric, is on the US exchanges. It's traded on the New York Stock Exchange. And this is its all-time chart going back to like 1995. This is on Webull, by the way. You could see it's been kind of just range bound since 1995. The high is up around 28.37, the low is 6.28, and right now we're currently valued at 10.55. You can see very clearly that this is a cyclical company. Something else worth noting, KEPCO is actually a government organization and it has a monopoly on all the electric power in Korea. When you invest in KEPCO, you're actually investing in Korea's electric power. Korea has one of the largest economies in the world. It's a very densely populated country, and KEPCO is focusing its efforts on green transitions. So this could be a way to play green energy in the future if you're interested in it. Coming in at 10.55 a share, the company is literally too big to fail because it is the only electric company in Korea of substance. Just food for thought. Let's take a look at this week's earnings reports. It's not going to be as big as the last 2 weeks, but I'm actually interested in a lot of the companies that are reporting this week because a lot of those companies are a little more in my price range, so I tend to follow them a bit more. So a couple ones that I do want to take a look at the charts for. We've got Corsair coming in on Tuesday. I think Corsair is going to have an amazing earnings report. It did last time. Love the company, gaming peripherals. Lyft and Uber reporting Tuesday and Wednesday. I hate Lyft and Uber. I think they're overvalued companies. Neither of them generate a profit. it. I think they're worthless, but I do want to show you the charts for those. We've got Coca-Cola and Pepsi coming in Wednesday and Thursday. Pacific Biosciences, this is one that I'm going to be looking at just because I'm interested in bio-nanogenomics. I'm a BNGO shareholder, so it's always interesting to see how Pacific Biosciences is performing. Bunge, BG, this is another one that I'm going to be looking at. I have been reading a lot about microalgae and seaweed as being kind of a future technology, future industry. I want to check out BG's earnings report, see how they are for profitability. Disney, of course, never bet against the mouse. We've got AstraZeneca with some vaccine sales coming in starting in December. Kraft Heinz, which I think is one of the greatest value investments on the stock market today. We'll talk about that. Dexcom, if you're a SENS investor, you want to take a look at Dexcom's earnings because Dexcom is the industry leader in CGMs right now. Yeti is coming in on Thursday. Yeti, I thought was like a complete meme of a company like 2 years ago, but now it's incredibly profitable. ArcelorMittal, for anybody who's investing in steel, really just an exciting week. Now for starters, let's take a look at Lyft. This is it. This is the all-time chart for Lyft. They IPO'd up here around $80 or so, and right now we're sitting at 53. That's not really the important part. Take a look at the financials. This is again on Webull. I'm going to go to just graphics, and if we look at the income statement, net income is dropping off. Cash flow is dropping off. The company is really struggling. If we look at Uber, we've got cash flow kind of sort of increasing for Uber. Income statement, net income is still negative, but it's less negative. And the big difference between Uber and Lyft is that Uber is offering food delivery service, whereas Lyft, as far as I know, they're not doing that yet. So both of these are just kind of trash companies that don't make any money. That's just my opinion. You can see the chart for Uber currently sitting at an all-time high. Disney coming in, you know, this is an established company. We're sitting just off an all-time high at 181 a share. All-time high was 183. We just set that a couple days ago. The big thing everybody's going to be looking at on the Disney earning reports is going to be the streaming. Disney Plus, the revenue from that, the subscribers. We know the theme parks are struggling. That's not really a big surprise. If you look at Disney's financials right now, they're kind of in the gutter because the theme parks have been closed and they cost a huge amount to maintain without visitors. They are open for like limited visitors, but it's not nearly the capacity that it was before. Yeti, this is the all-time chart for Yeti. All-time high for Yeti was January, $81 a share. Right now we're sitting at 73. This is crazy. You know, when it IPO'd back in 2018, I thought it was a joke. It's a glorified tumbler company, but it's become an established brand. They make high quality products. Everybody likes them. And if you bought in at IPO, you're super excited. IPO price was down around $16, $17. Just in 2.5 short years, we're sitting up at 73. That's an incredible ROI. Kraft Heinz is reporting this week. Kraft Heinz, I think, is one of the biggest stories in investing for value right now. You could see Kraft Heinz all-time high was back in 2017, close to $100. And today we're sitting in around 33. This company did recover from the COVID crash, but it's sitting around this $30 level for so long. The knock against Kraft Heinz is that they have an incredible amount of debt, which is true, but their cash flow is high enough to cover their debt. They're a profitable company, and check out this dividend over here on the right side, 4.73%. The forward PE ratio is only 12, and this is on Wikipedia. If you look at the average PE ratio in the US stock market, it's sitting at 34, and this is as of September 30th. This was the most recent data point they have, but the average PE ratio is 34. Kraft Heinz, we're sitting here at a PE ratio of 12. The company is cash positive, barely, but they are cash positive. They just raised another $3 billion by selling off their Planters brand to Hormel. So this is one of those ones that I'm actually thinking of starting a position in because I'm willing to wait on them to get positive again for the share price to go up, because even if I'm waiting, it will be climbing slowly over time. And in the meantime, I'm getting a 4.73% dividend, which is kind of offsetting the depressed share price. Coke and Pepsi are two other ones that are worth considering. They're effectively the same company. Coke is sitting here at $50 a share. Their float is 4.2 billion. Pepsi is sitting here at 141 a share. Their float is 1.38 billion. Basically, Coke just has more shares, multiply it by 3. Roughly, they have the same value. Coke still has a higher market cap, but roughly it's the same thing. Their dividends are both right around 3%. This is another one where the companies have been artificially depressed by the pandemic, and while their share prices may have recovered, their profits and revenue haven't. Coke and Pepsi get a huge proportion of their revenue from restaurants and from live sports, both of which are still not back to pre-COVID levels. These companies are being propped up, and perhaps the price right now reflects people anticipating the recovery, but the fact is they haven't haven't recovered yet. So their financials might not look great, but keep in mind, the further down the line, they will recover because they'll get those restaurant and stadium sales back. The last one I want to look at is Corsair, coming in at $45 a share. We've actually had a really impressive rise just since the start of February. Since my last video, I made it was at $36 a share. We're up to 45. All-time high is 51. If we take a look at Corsair's financials, let's look at the actual income statement here. Quarterly, right now for their income statement, their net income is 36 million for a company with a market cap of 4 billion. That's not terrible. Cash flow, they're also cash flow positive. Net increase in cash and cash equivalents, 68 million. This is a financially healthy company. This is a growing company. Their PE is at 32.78, which is a little below the stock market average. They actually have a little bit of room to grow just on PE alone. I think people are going to be piling into this once they realize how profitable this company is and how future looking it is, along with the gaming industry growing. I am not going to be showing you guys any investments this week on Robinhood Webull. As I'm sure you know, if you've been following my video, I'm closing out my Robinhood account and I'm transferring my accounts to Webull. The only problem is I can't transfer short dated options into Webull and I want to move my whole account over. So I'm waiting for good exit positions for my short-term positions in Robinhood. Plus, I just had to foot a $2,000 vet bill for my cat, and I'm a little short on money right now, so I'm not going to be doing any new investments. Thankfully, my US Steel option, I closed it out on Monday at like a 20% gain. That was really nice, a little bit of pocket change. The rest of my positions are doing pretty well. I can't stress enough how good Webull is. I've been using it for all of my research this week as I've been learning it. I know it's an intimidating platform. It doesn't have the same smooth UI as Robinhood, but you can find an incredible amount of information on Webull. It's actually more of a research platform plus an investing platform together. You could find all of the financials directly on the platform, charts. You could go in with all of your TA on Webull with their chart functions. And you can also find all of the company's press releases, any related news, and all of the SEC filings. So this is really a wonderful platform. I can't stress it enough. If you guys are interested in signing up for Webull, please use my referral link below the video. You'll get some free stock. I'll get some free stock. Everybody wins. I'm going to be releasing a DD video this week. It's going to be coming out on Monday morning at 9:45 Eastern time, 15 minutes after the market opens. So make sure you guys do check that out. I'm not going to give you a hint as to what it is. That would ruin the surprise. All right, everybody. Appreciate you as always. If you enjoyed the video, please like, subscribe to the channel. And as always, if you want to be alerted to my content as soon as it goes live, hit that notification bell. Thanks a lot. I'll see you next time.